The Fed's latest round of projections released Wednesday will include the much-studied dot plot. It's a chart updated quarterly that shows each Fed official's prediction about the direction of the central bank's benchmark interest rate. Our next guest, however, is in the camp of no cuts from the Fed for the remainder of the year. We got Kenny Polcari here, a Slatestone Wealth chief market strategist and host of the Yahoo Finance podcast, Trader Talk. So each one of those little dots represents a member of the Fed.
Yes.
Each year where they think rates are going to be.
Yes.
And even Jay Powell himself has said, don't take it as gospel, right? It's just sort of the prediction from the members of the Fed at a snapshot in time.
No, and it's like they take a pencil and they literally draw a dot on a graph paper. That's what it is, right? It's not computerized. It's just each person takes a pencil and draws a dot.
You gotta love some analog flavor from the Fed, right?
100%. But to Jay Powell's point, you can't, it isn't gospel. It's just what everybody thinks, right? I'm in the camp that we're not getting any rate cuts the rest of the year.
How?
Because I don't think the hard data suggests that the economy needs a rate cut. I think the hard data continues to be relatively strong and robust, and I don't see any reason that we need to see a rate cut. Look, if they cut rates, they're going to stimulate an already strong economy.
Well, to your point, Kenny, did you see, the Atlanta Fed GDP, that's right. I think the latest one is 3.8.
3.8.
You can't cut into that.
Right. We went from -3, where we were going to get quarter over quarter of negative numbers. Okay, how'd that work out, right? And that was only negative because of everyone had that tariff concern, right? So they all but now they have it at 3.8% in the second quarter. So where are you cutting? The economy is very strong.
The president wants them to cut.
Of course, every president wants you to cut. I get it, but I think Trump needs to stay in his lane. I get that if we cut rates, we save about $300 billion in interest costs. Well, okay, I hear you. And if Janet Yellen had refinanced it when it was 1.8%, we would have saved, $1 trillion in interest costs. Right?
What do you think? More near term. This week, are you in the camp that says the messaging, the narrative, the dots, nothing changes?
No, no, because I think there are some people that are I think there's some members on the committee that want to see a rate cut. So I think you'll see some small changes. But I think in the end, Jay Powell's going to say, okay, here's what it is. But this doesn't really mean this is where rates are going. It's what people feel. Right. You feel, he feels, and I feel. But it's only going to be determined really by what happens with the economic data. And at the moment, I think it's strong.
So what does all this mean for the market?
I actually think the market's okay because I think the data's strong, the economy's strong, so I think the market is okay. If you take the
market doesn't need the Fed to cut.
No, I don't think the market needs the Fed to cut at all.
Right.
I don't think it does. Look, we're almost kissing the highs again, right? We're almost kissing the highs. And if you didn't panic on April 2nd and you looked at your portfolio today, you're actually better today than you were on April 2nd.
If I'm at 60.26, walk me through the levels. Where's support? Where's resistance?
So support is way down to 59. I have to look at the chart. I think it's down to 59.97. And resistance is the high that we had 6,100 or 6,086. And that's not even resistance. That's just the all-time high that we have to kind of test and break through. I think kind of we stay between here and there, and we keep testing it. I don't think we're going to go right through it at the moment. I think we're going to find some resistance there, but I don't think, if we trade lower at all, I think we're going to trade down to the support line. I'm not even sure we're going to go there. But if we back off again, that's where I think we'd find great support.
61.44, by
61.44.
61.44.15 was the closing high, to be specific.
Right. Okay. So that would be that's not even resistance. That's just the prior high, right? We're above all three trend lines. So the resistance is going to be. You just have to look at the chart and kind of follow it. But that would be the next level that you want to test.
Gotcha. All right, Kenny, the man in black. Always good to see you, my friend.
Well, I was going to say one day we got to get him in here with the guitar.
Thank you, Kenny.